Good morning. Happy Monday. How is everybody? I'm a little late. Sorry. But sometimes things happen. It's just, everything just took a little longer to deal with this morning. And then I got in and I still am forgetting that my machine clock is it's slow. It is 9:07 right now, and my machine clock says 9:03. So that I don't know how to fix it. I've tried restarting. I've reset the clock, but it just keeps defaulting back to whatever it thinks it is. So I don't know. But yeah, as you guys are getting on, let me know you're here. Say hey. Hopefully everyone had a great weekend. I worked on Saturday because tax season. But yesterday I had a really, really great day. We volunteered. We had a Girl Scout volunteer event yesterday morning. Then I went and played some disc golf with my family. And then from there, I went and hung out. It was one of our team members, Carrie's birthday this past week. So we went and celebrated her yesterday with some pedicures and manicures. Yeah, they're sparkly because, I joke that I have 12-year-old fingers now because they're purple and sparkly, but whatever, makes me happy. So yeah, so it was a really good weekend, really good Sunday with friends, lots of friends and family time. Since I'm late, I'm only going to give everyone just a few more seconds to jump in. I know it usually takes everyone about 3 to 5 minutes to get the notification that I'm live and jump in, but I'm late and I don't want to run out of time. Hi, Mark. Good morning. So I'm going to take another sip of my coffee and then we'll get started. All right. Well, it helps if I have the right thing up. There we go. The right set of notes. All right, guys. So today we are talking about determining if your 2020 books are tax ready. All right. A lot of people, they put off doing their taxes because they don't think their business books are ready to go. They think there's a lot of stuff that needs to be done to them, a lot of things they need to deal with. And that's not always the case. So today we are going to talk about, almost give a little checklist of what actually needs to be done to make sure your books are tax ready. And as we go through this list, hopefully y'all realize that a lot of the stuff is already done. So fingers crossed. So, happy. Let me go through my little spiel that I'm happy you guys are all here. If you don't know me, I'm Bree Beers of Bree Beers and Associates. I am a CPA with a goal to enlighten taxpayers, and business owners on everything that they don't know that they don't know, right? So all things accounting and tax, we recognize that you don't know what you don't know when it comes to all these new things, all these business and accounting things. So we have created just a ton of free resources for you guys out there to help shed some light on that unknown. If you're not watching this in our Money, Tax, and Finance group on Facebook, please jump on over there and join. If you're a business owner, you should definitely be in there. It's a great community of small business owners. We post daily, but there's just a lot of interaction and it's just a great group. And then we have our trainings here at 9:00 Mountain Standard Time on Mondays. And then right after this at 9:30, we do our Q&As. We are going to have a little change up that's going to happen to the schedule starting next week. And I'll talk about that at the end of today's live. All right. And if you guys ever can't make it to one of these trainings or you remember watching one and you want to go back and watch it, you can watch all of them. They're in the videos section of the Money, Tax, and Finance group, or you can always watch them on our YouTube channel. That's where I prefer to watch because I really like the organization and the searching in YouTube compared to Facebook groups. But that's just me. All right, so let's jump in. Like I said at the top when I jumped in, I said it's tax season again, right? And so it's February 1st right now. If you're a business owner, okay, and your books are not already to your tax accountant, why? What is holding up the process, right? Again, a lot of times, sorry, I have something in my throat. A lot of times, business owners put off getting their taxes done because they think there's a lot of work to do on their end and they just don't have time to do it, or they don't want to do it, or they're just, putting it off. But we're going to go through this list today. And I think a lot of you are going to realize that there's really not a lot of extra stuff you have to do at year end. Most of this stuff is being done throughout the year. All right. So let's go ahead and jump on in. We are going to start with your balance sheet items. So I do want to talk to some of you who may not, if you use Excel spreadsheets still to track your expenses, or maybe you use QuickBooks Self-Employed, you may not actually have a balance sheet, but these items are still ones that apply to you. So just kind of listen. But what we mean when we say balance sheet items versus profit and loss items are just your profit and loss, right? Is your income and your expenses. Everything else that we're going to talk about are called balance sheet items. Okay. So Mark, we will talk about that stuff at the end because there's so much more additional craziness to 2020. And again, a lot of things that are preventing us from doing taxes, but some of them don't need to be. So I will touch on those at the end for sure. So starting with these balance sheet items, you guys. So first thing, you need to make sure that all of your cash accounts are reconciled for the year. And what I mean by those are your bank accounts. Whatever your business bank accounts are that go through QuickBooks, or maybe they don't go through QuickBooks. Maybe you're using, like I said, maybe you use an Excel spreadsheet to track your expenses and your income. However, in order to make sure everything is that you're working with data that's accurate, all right, your bank accounts have to be reconciled. All right, so for some of you, that's one business bank account. For others, you might have a couple different bank accounts. Maybe you have an operating account. Maybe you have a payroll account that you run out of. Maybe you have a savings account. Doesn't matter how many bank accounts you have, but they all have to be reconciled through December 31st. Who does that? That might be you. That might be your awesome bookkeeper that you've hired. Regardless, this is not something that should all be done at the end of the year. So if this is the item that's keeping you from passing your books onto your accountant because your books or your accounts aren't reconciled for the year yet, then that is a really, really good sign that it is time to hire a bookkeeper to keep you on top of those things, all right? Because your bank accounts should be reconciled every month. All right, so really the only one at this point, it's February 1st. The only one that you should maybe be waiting on is December. But even then, that should be done within a couple weeks of that month closing. So if you are like, I can't give my books to my tax preparer, or I can't put my info into TurboTax or whatever you do for taxes because nothing's reconciled for the year, big sign, you guys, that it's time to figure out how to afford and hire a bookkeeper to handle those day-to-day tasks, okay, or month-to-month tasks. Okay, so number one, all of your cash accounts are reconciled. So number two is your credit cards are reconciled. Okay, same concept, same thing. If you use credit cards for your expenses in your business, you got to make sure you're recording everything. All right, so the only way to do that is to make sure your credit cards have been reconciled for the entire year. And I'm going to tell you the same thing, that if your credit cards aren't reconciled, which if your cash accounts aren't, there's a good chance your credit cards aren't either. It's time to look into a bookkeeper to do that for you throughout the year. All right. The next one, if you have inventory in your business, okay, then you do have to take your year-end inventory count, and your 12/31/20 balance sheet has to reflect your year-end inventory. All right. And this is one that does change business to business. If you don't have inventory, and a lot of our clients or members here don't, because most of you are service-based industries, service-based businesses. So you don't have inventory, but I know there's a lot of you on here as well who run restaurants, or we have some automotive repair shops. We have some car washes. So if you hold inventory, okay, got to do your year-end inventory before you can pass that off to your tax preparer, okay? So the next one, we're going to talk about your AR and your AP, so accounts receivable and accounts payable. You as the business, well, not necessarily the business owner, but your bookkeeper might do this, but you as the business owner do have to review it, but you need to look at your AR and your AP reports, okay? And you need to make sure that they're correct. So if you go through your AR, let's start with accounts receivable, okay? If you go through your accounts receivable summary, your aging report, and you're seeing a lot of balances, like it's pages and pages long, and you're looking, you're like, no, that client definitely paid. That's definitely not an outstanding balance. That means your AR needs to be cleaned up. Something's not being handled on a monthly basis. So you want to make sure before you pass your books off to your tax preparer that your accounts receivable and your accounts payable are accurate. And how you do that, the first step you do is print out the AP and the AR aging summaries and glance through those, okay? And again, if you have a lot of old balances that are sitting out under the last column, which I believe is 90 days or more, and you're looking through those and you're like, we don't, those clients don't really owe us that money. Or you're looking through your accounts payable and you're like, we've paid all our bills. There's nothing outstanding, okay? You want to get that all cleaned up. This is especially true if you are what's called an accrual-based, if you're on the accrual-based accounting, which if you are, you would know that. If you're cash basis, it's still important that you make sure these numbers are correct, because if they're not, you could be missing some income or some expenses somewhere because it's getting miscategorized, or worse, you might be duplicating things. It might be that you're hitting your AR or your AP accounts with those expenses, and then when you're actually paying them, you're paying them out again, and so they're being double recorded. So reviewing your AR and your AP, or having your bookkeeper do the primary review of these documents and you doing the second review, very important before year end. And again, this is something you should be doing on a regular basis. This is not just a once a year event. Reviewing your AR and your AP is something you should be doing monthly, and at the very least quarterly, but definitely not annually. Annually is not enough, because let's take this for example. If you look right now, I'm looking at my 2020 accounts receivable and I see things from last January that are a mess. There's a good chance I don't remember what went on a year ago, and it can be a lot harder to clean up and get straightened out a year down the road. Same thing if you're only looking at your AR and your AP. I like to say most importantly AR, but if you're looking at these once a year, let's say you're looking back and you do see that there are legit outstanding balances, right? And they're all the way from last January, guys. It is a lot harder to collect money a year down the road from those clients than it is if you are doing it the next month or a couple months later, right? So regular reviews of your accounts receivable and accounts payable, super important, but definitely at year end, you got to do that one more time before you pass those off to your tax preparer, or before you throw it into TurboTax or H&R Block online. All right, so the next one, if applicable, your payroll liabilities you got to check your payroll liabilities. So these should only be, this is an area that gets very confusing for people that do their own payroll, because a lot of times the journal entries that enter your payroll into your system, they're not set up right. So if you have a payroll company, if you're using ADP or Gusto or Paychex, any QuickBooks, like full service payroll, if you're using any sort of payroll company that's doing the entire payroll for you, you shouldn't have a payroll liability account. What that means, if all of your money is coming out on the same day, so let's say today's payday, right? It's the first. We use ADP, so my net checks for all my employees come out today, and ADP takes all my taxes out as well. Okay, so everything happens on payday. However, if you're running payroll in-house, that doesn't happen. All right, what happens is, I pay my employees today, but I don't pay my taxes and stuff till they're due, which could be later this week. It could be at the end of the quarter. So that's where the payroll liability accounts come into play. So it's only if you're doing payroll manually, but if you are, you got to make sure those payroll liability accounts are correct. Yes. So Mark says, especially with the option to defer the employer portion from the CARES Act, usually cleared out now, but is deferred. That is such a good point, Mark. And if any of you are like, wait, what is he talking about? Join us in Q&A and ask that question, because we can definitely talk about that in our Q&A in a few minutes. All right, good point, Mark. So your liabilities, and then last on when we talk about your balance sheet, your loan balances tie to your December 2020 loan statements. So if you have an SBA loan, an EIDL loan, a PPP loan that hasn't been forgiven, if you have a line of credit, if you have a mortgage because your business owns your building, all right, any sort of loans, you got to make sure those loan balances tie out at the end of the year. Again, if you have a bookkeeper, they're doing this for you or should be, okay? So it shouldn't be something, again, that's happening all at the end of the year. These are all mostly things that should be happening throughout the year. So at the end of the year, it's like a checklist, you guys. It's like, have a cash account's been reconciled all year? Have my credit cards been reconciled all year? Have we taken year-end inventory? Have we done a year-end AR and AP review? Are our payroll liabilities correct if you have them? And do all of our loan balances tie? Check, 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 check. If you have a bookkeeper, this is going to take them not very much time at all. If it's you doing it, depends on how much you have going on. All right, but shouldn't be a long process, again, if you're doing this on a regular basis. So now let's talk about your P&L. We've got to talk about your income and expenses. All right, so the first thing you got to do is you got to make sure you've recorded all your income. All right, if you are using if you're using a bookkeeping program such as QuickBooks Online, Xero, Wave, as long as your accounts are all reconciled, this should be this should be accurate unless you have some weird one-off mistake going on. But you should record all your income. It should all be recorded in your QuickBooks, Xero, or Wave file. If you're using a spreadsheet, right? If you're tracking your income and expenses on an Excel spreadsheet, then you do got to make sure that you've accounted for all of your income. One tip here, you guys, and this is a lot for my self-employed, my independent contractors, your gross revenue that you report on your tax return needs to be at least as much as all of the 1099s you've received, okay? And this kind of becomes a problem sometimes for my clients who, let's use real estate agents, for example. So a lot of times real estate agents, you only get your net check, right? So let's say you had a $10,000 deal, but you have to do a commission split. You have to pay your brokerage house, some fees. So let's say you only get $7,000 of that $10,000 check. All right. So a lot of times that's all I'm putting onto my balance sheet. I received $7,000. That's all I'm recording as income. That's not correct. Okay. You actually made $10,000 of income, but then you had $3,000 worth of expenses that you get to deduct. All right. It nets out to $7,000. However, if your 1099 at the end of the year shows that gross 10 grand instead of just the net 7,000 that you got, you're going to have this discrepancy. All right. And unfortunately, I've especially seen this in the real estate world. Different companies do it different ways. Some of our real estate companies issue the 1099 using the gross amount, right? Using that $10,000. And then they give you a fee schedule that shows all the fees that they took out for the year. Others only record the net amount they paid you. So, and then I've also seen some that report your net amount. So they report that $7,000 that you actually got after they took all their fees. And then they still give you your fee schedule. But what do you do with that? You got to know where your numbers are supposed to be. So this is where having a bookkeeping software really comes in handy, you guys, because you don't have to do all those calculations. It's all put in your system. But if you are using an Excel spreadsheet, if you're just using, if you're counting up all your deposits from your bank statements throughout the year, and that's how you're recording your income, you got to know what numbers you're using, right? You got to make sure you're using those correct numbers. And that can be hard. And so let's see. Reload. Okay. So recording all of your income. Second, if you have employees, y'all, and you run payroll, you got to make sure your payroll account balances on your P&L tie out to your year-end payroll statements. Meaning, right, that your gross payroll or your gross wages paid ties to your employees' actual gross wages, and you have all your payroll taxes accounted for in your payroll tax accounts and any other additional fees. All right. And this is another one that gets a little messy because a lot of times we just have especially if you use a third-party company, a third-party payroll company, okay, you have two deposits or two withdrawals that come out of your account, right? So today is payday. I have the amount that goes to my employees for net check, and then I have the number that comes out for payroll taxes. But that's not it, because part of that payroll tax payment is actually your withholding from your employees. And this gets kind of complicated. However, the good news is if you get the journal entry memorized from the get-go, you put it into your system, really easy every month to just import the correct information. Okay. But making sure your payroll is correct is another thing. You've got to make sure it's right, especially your owner pay if you're an S Corp officer, right? Your meals need to be correctly recorded to your meals account. Okay. This is one I get a lot, not buried under advertising, not in your office expense, not something else. The reason being, your meals, you guys, for 2020, you get it's a 50% deduction. Okay. You don't get 100% on meals. That's normal. Okay. That's a normal rule. Does that change in 2021 and 2022? It sure does. But we're talking 2020 tax planning. So when you're putting your tax return into software, or when you're giving it to your tax preparer and they're doing it for you, they need to know how much of your meal, of all your expenses are meals, so they can allocate it correctly and only take that 50% deduction. All right. The last big one for expenses that you want to make sure you have right. Any single items, you guys, that you've purchased that are greater than $2,500, you got to somehow have that separated out from any of your other office items, furnitures, assets that are less than $2,500. All right. There are plenty of rules and tax laws and loopholes that are going to allow you to take the full amount of that expense and deduct it this year. It has to be recorded differently. All right. And without getting too much into depreciation and everything, any of your expenses under $2,500, you just deduct this year, right? It just goes on an expense on your P&L. However, anything over $2,500 is considered a capital asset. You need to put it on your capital asset list and then normally depreciate it. Like I said, there are plenty of loopholes that will allow you to take 100% depreciation expense on that item. It's just got to be recorded differently on your tax return. All right, so you or your bookkeeper should be recording those single items over $2,500 somewhere differently or separately than all your other office expenses. All right, a few more. So your owner's health insurance should be in its own category, because no matter whether you're a Schedule C business, an S Corp officer, or a partnership, your health insurance for you as the owner is recorded differently than your health insurance paid for all of your other employees. Okay, so your owner health insurance should be broken out, or you should be able to give an amount to your tax preparer. So if you are an S Corp officer and you are in payroll under all of your other employees, and you are just paying your health insurance as one lump sum, right, for you and all your employees, it's on your P&L, that's fine. So let's say it's $20,000 for the year. You have to submit your statement that shows, or something that shows how much your health insurance as an owner is, because that is broken out and reported differently. We'll call that differently. All right. Let's see. And then if you have expenses that you do not know where to put them, and this happens, right? You just have these random one-off purchases you made. You're not really sure where it goes. I advise, and every CPA is going to be different. So if I am not your CPA and you're not doing it, you're not doing your taxes on your own, this is not advice for you. But if you use us or you do it yourself, what you want to do is put them in an account called Ask Accountant with a very, very detailed explanation of what you bought. Okay. Then if your CPA or your accountant will be able to look at that description and be like, oh, okay, this is where this should go. And they can move it to where it belongs. If you're doing it on your own, I believe TurboTax, and I think in H&R Block as well, have a help section. You can use it, and ask the question, where does my expense for XYZ go? And it'll help you. Okay, but you do want to make sure there are a few things that you do have to make sure you allocate correctly, because there's different rules for how they're treated on your tax return. All right, and last but not least, not anything on your balance sheet or your P&L, but if you log your mileage and you take a home office deduction, you got to make sure you have those in order. And that, my friends, is the one that usually takes y'all a long time, right? Because you're not good at doing your mileage throughout the year. You forget, now you have to catch up. Or you don't know how much your home office, all your expenses are. You got to collect them. So I do have 2 trackers. I have a mileage tracker and I have a home office deduction calculator. They're in the comments above or below where we are, depending on where you're watching this. Go ahead and download those and use them. They're great tools, and it'll make your job easier if you're doing this on your own, or your CPA. They will really appreciate if you turn these logs in, or these calculators in, because it'll help make their job easier. So, all right, I'm a little over, but it's okay because I started late. So let me go. Let's see. I'm going to comments. Oh, I wish I knew who was late, because I bet it's one of my friends. If you guys are watching this on Facebook, there is in the comments, it says we're using StreamYard. Please allow StreamYard to access your name. If you do that, then you won't be a Facebook user. You will be whoever you really are. And but I always like to know. And so I'm going over to Facebook to cheat. There we go. Okay. It's Emily. Hi, Em. So Emily says, what is the deadline for me to get you all the info to do our taxes? Great question. If you guys are a client of Bree Beers and Associates, you have a business return that is due March 15th. Okay. So if you have an S Corp or you have a partnership, you need to get your documents into us by February 22nd. I can't believe how close that is now, right? I'm guessing it's 3 weeks away. Ish. Okay. So March 15th deadline returns, S Corps and partnerships. Get your stuff to us by February 22nd. Everybody else, if you have a Schedule C, your individual returns, C Corps, not estate trusts that are due April 15th, you guys have until, I believe it's March 22nd to get your stuff to us. So Mark says, what about LLCs, taxes and S Corp? Taxes and S Corp, March 15th. You're due March 15th. Quick note on that, you guys. If you know you're not going to be ready, whether it's with us or you do it yourself. All right. If you know that your business books are not going to be in order in time for you to file by that March 15th deadline, if you're an S Corp or a partnership, okay, file an extension. File an extension. It's free to file. It should be. It's really easy to file. It gives you until September 15th to get all your stuff together. Don't wait that long, but it gives you 6 months to get all your stuff together. And there's no penalty or fee to doing it. Okay. However, if you do not file an extension and you're a partnership or an S Corp, okay, if you do not file an extension, but you file late, it is $200 per shareholder or partner per month that you are late. All right. So get your extension filed, even if you can't file your return. Great question. April's here. Yep. She says literally 3 weeks. Yep. And then Emily says, thank you. And will this live be available to rewatch? Yes, Emily, always available. If you're on Facebook, it's available in I believe it's called events. No, it's called videos section. It depends on if you're looking at your phone or on a machine. So it's different. You can also always watch them on YouTube. All right. So a few end announcements, y'all, before I jump off here and jump onto our Q&A. So bittersweet excitement. I do want to celebrate though, you guys. We're actually at capacity for the next tax season for taking on new clients. I have calls this Thursday and next Thursday, and right now my calendar is full. Could there be openings? Quite possibly. So keep looking. But right now we are full, which is great. So yay for that. But we are also going to be making a few changes this upcoming tax season. And so I'm going to step back into the business a little more. It's tax season. I got to step back into the business more anyway. Excuse me. But because I do need to focus, stepping back into the business and focusing a little more, I'm actually going to put a timeout on these trainings until after tax season. That was a really hard decision for me to make because I really do enjoy coming on here every week and training you guys and helping you out. So the compromise I made with myself is we're going to take a break on the 9 o'clock trainings. However, I will still show up here every Monday at 9:30 Mountain Standard Time for Q&A. Okay, Q&A and updates. So I mean, these trainings are great. I know they're beneficial, but when I had to decide one or the other, which I really feel like the Q&As are a little more beneficial to you guys because they're specific to what you guys have questions about. So that was a really tough decision, but that's what we're doing for the next couple months. And then in May, we will be back with our 9 o'clock trainings. All right. Well, maybe they won't be at 9 o'clock. I don't know, but our weekly trainings. I do want to tell you guys, though, to make sure you subscribe to our YouTube channel because we spent the weekend recording a whole bunch of content that will drop weekly on Wednesdays. These are just quick 5 to 10 minute videos that basically take what I come here and talk to you guys for a half hour, break it down a little more. Starting this week, there's a lot of stuff on PPP and all the and stimulus and all the stuff that passed in December. So definitely go check out our YouTube channel and check those weekly videos out because I think you'll find they're a very bite-sized replacement to these half-hour trainings and it's just temporary, right? It's just temporary. And again, if you really want to see me, come join me at 9:30 every week. Well, 9:38 now because I'm late, but for our Q&A session. All right. Cool. So thank you. Wendy says I can help. Yes, Wendy can help. Wendy's a tax preparer as well. So yeah, so you guys, I hope you guys have a great week. I hope to see you guys all in just a few minutes on the Q&A that I'll jump back on here for. But if not, see you around. But no, come join us for our Q&As. All right, I'll see y'all in a few minutes. Bye, guys.